this feels like they're just kind of shoehorning in a bit of crypto into traditional finance. It just doesn't feel right. Just having a boomer coin ETF on the futures contract is, it's not the right thing, but from a macro perspective, it's just more acceptance. So it's just another marker stone on the route. I thought the other interesting story this week was that story that it looks like banks are going to be able to hold Bitcoin on their balance sheets and for it to be accounted for. Again, anybody who's talking about the regulators are going to ban it, clearly they're not, because if the banks are now able to put it in their balance sheet and deal with it properly, it's kind of, these are all kind of just marker stones en route to the broader adoption, I think, even though they're a bit suboptimal. So I think the point being is the traditional system is struggling to figure out how to fit this in, right? And we've just seen that with the Bitcoin ETF. It's kind of they're trying to fit it into an existing framework that doesn't work. So classic negotiating tactics would be to start with the hardest possible line first, which is everybody's going to prison. You're all terrible people. This is all illegal. The reality is, I think they've learned pretty quickly that there's a massive amount of money behind this and a lot of young people who have a lot of votes. So what's going to happen, I think, somewhere within this is a grand compromise. And that's what has to happen. And it won't be the securities laws. It'll be some new digital asset laws. I spoke to, on Real Vision a couple of weeks ago, the chief fintech officer for Singapore. And we talked about the Singapore regulation. They got it really right. They kind of sandboxed it. Then they said, listen, we want to work with you to help develop this space. And then on the retail side, they said, we can't tell people what they should invest in, what they shouldn't. We're just going to give them risk warnings and tell them these are risky things. And I'm like, yeah, that's a much more pragmatic, sensible way of approaching this than trying to use the 1934 law. So I think in the end, there's going to be a lot of bluster and it's negotiation tactics because everybody wants to get their side of the line. And there'll be a grand compromise reached probably within, I guess, 3 years. I don't think it's going to be quick. The issue I've got with DeFi is it's so bloody complex. You have to know what you're doing. But soon, give it 3 years, and it'll be on your mobile phone, and you'll just have the choice of this yield product or that yield product. And it won't be this ridiculous MetaMask hidden secret world where you've got to give a nudge and a wink to find out how this thing works. And, it's impossible to navigate. My guess is when we go through a more protracted bear market at some point again, DeFi is going to explode because that's the time when suddenly people are just going to say, oh, I can earn a 10 to 20% yield across these things while I sit out and wait for the next opportunity to come for capital appreciation. I mean, that's the game changer. As a friend of mine came to me and he's like, he'd sold out some of his Bitcoin into the rally up to 65,000. And he said, suddenly it dawned on him that he didn't put the money back in a bank. He just put it in a stable coin and got yield. And he's like, oh shit, I never have to go back to a bank. And it was like the light bulb moment that we all talk about, but when it actually happened to him, he took some of his crypto gains out and thought, well, I might as well just get this 10% yield here. Why would I ever go back to a bank? And I think it's that process where that's where DeFi is really going to come into its own. Because also there's going to be a huge amount of capital coming from the institutional space. I've been speaking to a lot of these kind of big fixed income funds, big hedge funds. They're all looking at setting up DeFi books because it's perfect for them.